Hello traders, Gary Wagner here. It is 12:10 in Honolulu, 6:10 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 3rd day of May, 2024, and this is the weekend review of the evening report. Today's jobs report sent ripples through multiple financial markets, taking equities strongly higher, the U.S. dollar and yields on U.S. treasuries sharply lower, and creating an extremely volatile day in gold, where the most active June contract had a $45 range, trading to a high of $2,330.70, a low of $2,285.20, and settled down $3.30 at $2,310.10. Silver futures, basis the most active July contract, is currently fixed at $26.78.5 after factoring in today's decline of 14.5 cents, or a drawdown of 0.54%. Today's decline in both gold and silver occurred with dollar weakness, the dollar index declining now for the 3rd consecutive day. I draw your attention to the intraday low, where the dollar index actually traded to 104.594. It did recover quite nicely off of the lows, losing 0.40% and closing at 105.729. This morning, I did send out a trade alert to go long June gold. We sent out the trade alert a half hour after the jobs report was released and a half hour before the opening bell was rung in New York. My assumption was that if the jobs report came in well under economists' forecast, that would be viewed as a bullish factor for both gold and equities, bearish for the dollar, because signs of an economic slowdown would be viewed as a potential catalyst for the central bank to consider rate cuts sooner than later. The report revealed that nonfarm payrolls rose by 175,000 last month, short of the 243,000 estimate by economists polled by Reuters. While it did have a tremendous boost in U.S. equities, took the dollar lower, and yields on U.S. treasuries lower, it did not have that effect on gold. At the time we sent out the trade alert, gold was at $2,314. We placed a stop tight at $2,297 to limit our risk. Traders taking the call got in between $214 and $211, therefore a loss between $13 and $17 per ounce. I am sorry about the loss, but I'm also perplexed as to why gold did not react in a bullish manner the way U.S. equities did. I was under the assumption that gold could find potential support at 2,300. However, because of the way it reacted after the release of the jobs report, we could see gold trade lower. If that's the case, I would look at the 50% retracement at $2,250, or as deep as $2,207, the 61.8% retracement, because we have a series of tops that came in which that price point acted as a level of resistance. And there is one other item that I wish to bring into the mix. During the last FOMC meeting, while they left interest rates intact, they did revise their monthly reduction of their balance sheet. Prior to the FOMC meeting, the monthly target was a reduction of $95 billion in assets. Starting next month, they will only liquidate $60 billion in assets rather than $95 billion, in essence, keeping an additional $35 billion liquid in the money supply. This revision to their balance sheet has definitely fueled the recent rally in U.S. equities, and is perplexing that it hasn't done the same for gold. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you after the weekend for the next evening report.